Hey guys, it's Simon with Trade and Perform Coaching. Let me kill the music here real quick. And toughtrader.com. And I'm doing the trade review for the 6th of September. So I had a little bit of a rough day today. I didn't get filled at my white zone, and I really couldn't figure out the long side of the trade either. So some days it just goes like that. But I want to review the day, and I want to show you how I handled it psychologically because it can be very frustrating. It can be very difficult not to be able to capture your trade. So there was a couple of issues. First of all, we were opening. So let's pull up the chart real quick here. Let's see if I can find it. Today's chart. Let's just go today. So first of all, there was a couple issues. I just want to look at the bigger picture really quick. And what you'll see here is that we were opening inside, right in the middle of yesterday's range, right? And you see this area here. This is called a poorly auctioned area. It makes the market really easy to kind of slip through this little area. And so I couldn't really tell whether we were going to get pushed up or down. My only plan was to look for responsive sellers here in the white zone, and I was hoping to get down to the green zone with some tick divergence to grab along. You normally after a day like yesterday you would expect balance, but the first thing we had to do is kind of go step by step and figure out whether we were going to have another trend day up or trend day down, and that's really what I want to address in this review session, right? Is where were the opportunities, and then key in the afternoon we did not short. Okay, I can't stress how important it is. A lot of times you'll get this feeling like, oh, the market's going to roll over in the afternoon, or it's going to keep dropping. One of the biggest things when I'm coaching people one-on-one, they really want to get bearish in the hole, and it's so totally understandable because when you're completely in the hole, you think it's just going to keep dropping all day long. It's just going to keep dropping all day long. There's no way it can recover. And the next thing you know, it's made a full recovery. If you'll notice by the end of the day, we pretty much V-shaped the entire day. Here's the secret to that. The market V-shapes a lot. It's not unusual. You have to learn to look for the signs. So let's jump to the price action really quick. Before I get started, let's go, and I have to flash up this disclaimer. If you want to read it in more detail, you're welcome to. But basically it says, past performance is not indicative of future results. This is for educational purposes only. I'm sharing my trade plan with you. Sometimes I execute that trade plan at a really high level. Sometimes I do less than a stellar job. The key thing about having a great trade plan, a good trade plan, is that whenever you're having a hard time, whenever you're off base a little bit, it makes it really easy to find out and spot, hey, this is where I'm not trading my trade plan. This is where I'm a little bit off. This is where I need to move to get back. So let's kind of go with the open and figure out how we could have figured out this day with the benefit of hindsight. So you see me doing the preview there. So the first thing you're going to notice is here's the opening print, right? This is done real time in the mentor room live, right? And so the first thing I say is, well, look, we're banging right up against the white zone. I don't want to go long against the white zone, but I've had a series of open drives higher. I want to see if NQ and ES are trading together, and you'll notice I really had no clear resistance above on NQ here to the right, right? So some markets set up so that you know exactly what you want to do. Some markets don't. And I'm going to give you an example of that, and I'm going to show you here. Early this morning, I tweeted, so it's 8 o'clock now, so this should have been about 12 hours ago. And let's see if I can get back to it. And I'm going to say, so I kind of gave a little briefing in the morning, and the first thing I wrote is that 30-year, that 157 is setting up as a launch point for a trend day. So poorly auctioned yesterday. If we get and hold below, plenty of room down. So I want to show you that. What time? This was done 13 hours ago. It's currently 8:04 p.m. That puts us about 7 in the morning Central Time. Now, I want to show you why that's important. I talk about ES, but it's the quality of the setup that I'm talking about. This was an adjustment. This was the original location. There wasn't a zone till all the way down here, but you'll notice I put 157. That's right here, and I said if we can get below 157, there's just tons of room to the downside. So look at this break of 157 late in the afternoon. This rolls from 157 all the way down to 156 and 7/30 seconds. That's about a $750 per contract trade right here, right? And understand that this trade setup, the early identification of this trade setup was so critical to making a lot of money. One of the members of the room I know had a ton of puts, and was really able just to have a phenomenal day to the downside. Understand, right, that when you have the 20 years experience in the right side, 20 years experience, that's a big advantage, right? But secondly, my knowledge of the charts and how trend days set up and whether we have a good setup or a bad setup. Being able to post before the open, well before that break, right, 13 hours ago, hey, that the 30-year note 157 is setting up as a launch point. This is the private member feed, right? So let's compare that to this. Over here, what do I have? I have resistance right above in ES. I don't have very much resistance in NQ. It's kind of a clear palette there. And the goal would be to push it down to 159 in 930 seconds to 19 to 59.19. This is the first area, even though it's a green zone, and the green zone is the weakest of all the zones, and I would expect it. I expect green zones to get penetrated and pushed through, okay? But I expect to pause in those locations. I don't take a major stand there. I have to have something else to take a trade. So first of all, let's go back to the open. We're above the opening print. Let's fast forward a little bit through here because this is really important. Notice almost immediately we get below the opening print on both NQ and ES. So that tells me first thing, that's not what an open drive higher looks like. It might be what an open drive lower looks like, but there's a couple of challenges in between. I want to know if we fill the gap in either market and whether we can get back above the opening print. And then I want to know whether we can drive lower. So, and I'm looking for NQ and ES to match up. It's a couple of things, right? So you got to understand, this is the edge that a professional trader has, is that I know all the pieces that I'm looking for. It's like I'm cooking a stew, right? And you can't just have meat and cook a stew. You got to have all the pieces come together, right? Like kind of like what the 30-year note did today. So let's kind of fast forward through that. Now I want you to watch this. Look at the initial push back up to the opening print. NQ can't get above, ES can't get above. So I'm not bullish, and if I'm really aggressive, I'm bearish right here. Okay, so watch as we progress forward. Tick opens up positive. I know I'm not in an open drive situation. I'm not in open drive higher or open drive lower at this point. This is called an open auction, okay, which means we're just looking to find who's going to have the dominant price. And right now, no one does. Tick is coming down. Price isn't really coming down. And I want to watch the behaviors, all I'm doing at this point. Because remember, this is my primary location to find a short, right, on ES. And this is my, really it's not a primary location to find a long, but I figure if we push down into here and ES can hold, that'll be a launch pad to the upside. So watch how the PA picks up. Now, notice ES and NQ are now both, look, see that right there? That was really important. See how ES picks above and pushes right to the tick to the white zone. But notice in this push, we push to a new high, but NQ doesn't push. Why is that important? Well, it's important because NQ usually leads the market. Not always, right? It's not a cast the die type of rule. It's just a general rule of thumb. When I look here, I'm like, hey, the market looks pretty good, except NQ isn't leading, right? And we're pushing right into the white zone. This is where I want to sell. Now, I was looking to get short 24.67. I could not get filled at 24.67. I had no trade. So watch what happens next. Look at the immediate rejection. This is an attempt above the opening print. This is a rejection out of the white zone. All of a sudden, you're starting to think, hey, wait a minute. We couldn't get above the opening print on NQ. It couldn't make a new high. ES rejected out of the white zone. This is a lot of information. Why is it good information? Even if you're not short, you know to pull in your bullhorns here that there's a problem, that ES is going to have a difficulty making it in. What am I looking for immediately? 7 to 10 point rotations to the downside, 20 to 30 point rotations to the downside on NQ to set up longs, right? So watch as we push down. Now look, right into the yellow zone now, excuse me, the green zone. What's the problem with the green zone on NQ? It's a weak location, right? And it can get traded through pretty easily. So what am I keying off of next? The size of the rotation down. And I'm also noticing that ES is not following down as hard. We haven't filled the gap there, right? Now, I am cautious, right? Now, see how it's come right to the back of the zone and responded? See how we pushed all the way through here and responded back up? So I'm looking for a deeper push, but we're not done yet. I'm usually expecting the zone on NQ to get busted. So watch as we push through here. And now look, we have broken this zone. Now, here's the thing if you're a day trader, right? A lot of trade traders are getting bearish, but what's the problem here? ES is still not broken down. It's not following NQ. these two markets are not matching up, right? We've already filled the gap, broken below the gap, and pushing down below the 50-60 retrace over here, versus ES has just filled the gap. And when we broke a new low on NQ, ES did not break a new low. Now, that doesn't mean that we couldn't move lower, but what it does mean is that I do not want to continue. I do not want to be caught short on NQ here, right? We've had a big stretch. This is the stretch where I'm looking to get a U-turn out of NQ, and I am looking to push this trade to the upside. Why? What's still my goal? Back into the white zone. I know that we haven't been able to make it to test the prior day's NVPOC. We can't even get 10 points down in ES. Buyers are in overall control here in ES, and NQ's got the proper stretch where we're usually looking for a response. Again, this is just because I have 20 years of knowledge. I know this green zone can get passed through both ways pretty easily. Now watch. We push back up. Went through and did a webinar in here. This is a team member coaching session. Now look what's happened when we come back here. So notice, this is when we were down near the lows in, well, hold on. Still team member coaching session. Let me push this back. There we go. Now look what's happened. Remember, so I had to skip over the coaching session. I apologize. Remember, this is when we were in the hole, right? You're noticing ES could not hit a new low when NQ hit a new low. We trapped back into the range. Again, this is a place I notice where a lot of day traders have a lot of difficulty, is they are pressing shorts way deep in the hole. Look at this rebound. This is bone crushing. If you are trying to short NQ, it's just, I don't have another way of putting it other than it's absolutely devastating to have that situation where you're getting run over because you couldn't control your emotions in the hole and you thought we were going to go to zero when ES never rolled down, right? So here's the problem. I wanted to be short out of 67 and I couldn't get filled, right? And I don't have a strong location to get low from below, but that does not turn into me wanting to short the market, and I did not. So long story short, I was looking for a push back to the upside, right? I didn't have a short, I didn't have a long, and I really thought that if we could get reversed and back over our last swing low that we could really push here. Now look why that's important, right? Watch what happens here. We're going to push back up, and notice we push right back up against the white zone again. Went to lunch here, but I'll pick it up. There you go. Now look, we're in the white zone. Now look at the reversal on NQ. We've actually pushed all the way back up into a new high of the day. Now this is really, really important. See this push right back into the white zone? I do not want to be getting long into a white zone that's above the price action. I am either looking to be scaling out of a position and or shorting. It's too late in the day to short, but let me show you why that's important. Look at so just like it was important not to get bearish in the hole, it's important not to get bullish up on top, right? So watch the last couple of minutes of the market here. We're pushing up. Look at the rejection down. You see this one more time. This is a big rejection. This is a rejection from 69, right, all the way back to 64. 5 points of rotation down lower. So a couple of things. Being able to read the PA in the morning and figuring out who's in control and whether NQ and ES are matching up. Number two, don't get bearish in the hole. It's not a profitable strategy. You're looking for longs in the hole. Number three, you're looking at the zones, particularly the white ones and yellow ones, to offer you key rotations, right? Both short and long as the market rotates into those areas, right? And the last piece, we're near the top of the market. You're going to usually on most days find responsive buyers, and you're going to get U-turns back up. Right now, part of that is 20 years experience. Part of it's understanding how market, the zones is understanding how volume profile, TPO, and structure all play together to find where we're going to find rejection. Remember, those are posted the night before. They've already been posted for this evening, right? And the last piece is balancing your psychological outlook so you're not getting emotional when the market's down, and you're not getting overly emotional when the market's up, and you're staying focused on trade process. Anyways, I hope I was clear. I hope that was helpful. My name is Simon. I'm with Trade and Perform Coaching. Trade location is a huge edge. Having a written trade plan you can follow is a huge edge, right? Knowing which days offer potential trend days is a huge edge. And those are the things we offer to the members in the mentor room on a daily basis. It's a great value. If you'd like to join us, it's $95 a month. I'm happy to extend a 5-day pass to anybody who would like one. Email me at tradeandperform@gmail.com. You're welcome to visit us for 5 days, and I think you'll learn a lot from the experience, and maybe you'll decide to make what's a relatively minor investment, less than 2 ES points, a profit, for gaining a significant edge in your day trading. Anyways, everyone have a wonderful day, and we'll talk to you later. Have a good night.